Good morning, everybody. Oh, nice, Joshua. A lot of us. Joshua, it shouldn't be a short trade. That would just be a spread where there's nothing naked. Your risk is offset. So be happy to help you through that, or give our team a call. They can walk you through maybe how to get your brokerage set up for it. But it's nice. You got a 21% gain on it. Can't complain about that. It's awesome. Hey, good morning, everyone. Happy New Year. Hey, Brad. Hey, Zana. Yes. I'm excited for this year. Um, it's funny, at the turn of every year, there always seems to be some sort of uncertainty, especially coming off a bullish year like 2024, 2023. People kind of feel like, oh man, maybe this year is the year that we see a pullback. I don't necessarily think that for the whole year. I'm going to walk you through
Good
what I
morning,
think for each
everybody.
quarter of the year. Am I getting an echo? Sorry. Um, And then we're going to do some trades together. It's going to be a lot of fun today. I'm going to try to provide you guys a lot of value each and every day. So if I need to slow down, which I know I often do, let me know. If you guys want to take screenshots of any of this material, that's perfectly fine with me. I actually encourage you to do that. Some of it we'll cover like this week, and we'll cover it again next week, just to kind of instill what we're learning here together. But I'm really excited for this. Excited for this new format. Again, this is going to be every Thursday morning at 9 a.m. Calling it the opening playbook. I think it's going to be streamed on YouTube as well. So if you're watching on YouTube, go ahead and subscribe now. So let me go ahead and clear my throat real quick. But anyways, I'm gonna try to get through the material before the 9:30 bell, or actually, I don't mind if we miss the 9:30 opening bell, as long as we're there to place our trades around 9:40. Once the markets start to settle a little bit, you guys know that first opening 30 minutes of the markets, a lot of times there's just volume flying in from all over the place. It can be unpredictable. It can be very volatile. I typically like to place my trades after 10, but this morning, on Thursdays, just because we're on a time frame here, I'm going to give them to you guys right once we get through all the material, and then you can make the decision yourself. If you want to wait a little longer, that's what I would prefer to do. You can do that. I'm going to place my fills right live on camera so you guys can see the trade in action for yourself. But with that said, let's go ahead and get started here. Yeah, I'm going to steal your screen. Alrighty, the opening playbook. Deanna's working on a cool little logo for it. Deanna, can you see this little thing down here from Zoom that says annotate or no?
Nope, you're all good.
Okay, it's recently been in the way. I kind of don't want it there, but I'm not sure how to get rid of it. I'll figure it out later. Let me pull up the chat here. Will this be recorded? Yes, it will be recorded. Correct, Deanna?
Yeah, it's actually already on YouTube. So streaming right now, as soon as we close the room, it's going to be on for you guys.
Awesome. Sweet. Zana, yeah, we will be closing those today. We'll go ahead and start here with the futures morning update, kind of where we're at in the markets. Now, if you guys were with me on Tuesday, if you were in Telegram, I posted this on December 31st. It's New Year's Eve. We typically see something similar to this every year at the end of the year, where we'll just see a lot of volatility. A lot of times, what you'll have is large funds, different institutions managing money. What they'll do is say for example, I made $100,000 on Bitcoin this year, but I also traded, I don't know, XLE and lost 50 grand. Well, if I have that XLE position open and I want to offset the taxes I'm paying on my Bitcoin gains, I will just close my XLE position for a loss. So then I'm only paying taxes on that net 50 grand. So that's what we'll see a lot of times in the end of the years. Fund managers, institutions will sell the positions they're down on simply just to bring down their capital gains tax number. So that's why you'll see a lot of wild swings at the end of the year. I drew this up for you guys on Tuesday and said, hey, let's expect markets to drop today and then bounce back going into this morning, to Thursday, because markets were closed yesterday for New Year's Day. We saw this exact sell-off happen. Question is, did we get the bounce? Well, if we're looking at the futures right now, we are most definitely getting the bounce. And I'm going to cover the news on why it might be up so big right now. But I want you to know when at 8:30 before the news dropped, the markets were already up very high. So It kind of played out perfectly, exactly as we called it, exactly as we anticipated it. So here, if you're unfamiliar with the futures tickers, this is in Thinkorswim. You can use these tickers in Thinkorswim to look them up. Bitcoin is slash BTC. That's going to be your Bitcoin futures up to 97.3 when I logged on here. Keep in mind, this isn't going to be the spot price of Bitcoin. It's going to be the futures price. So the spot price is probably 96.8, 96.9 in that range. But this is the futures price in Thinkorswim. NQ is NASDAQ. So NASDAQ, NQ, uh, up almost a full percent. The Russell 2000, that's small caps, up almost a full percent. That's really good, really healthy. That's a good sign. I'll point to maybe why they both will be up right now in tandem. The ES is your S&P 500 futures, up nicely. The Yo Mama Dow, YM Dow, up a half percent. Gold up half percent. Bonds up slightly. VIX is down. All very good signs. All kind of what we anticipated. Again, with this Telegram post here. If you guys aren't in Telegram, Deanna can post you guys a link. If you're not in Telegram, just say you're not in Telegram here in the chat, and Deanna will get you a link directed. Mel, why do I use futures price and not spot price? I use both, Mel. But in Thinkorswim, I just line them all up like this. If I want to get the actual spot price of Bitcoin, I'll typically go to investing.com. I love investing.com. Actually, I'll show you the calendar next here of why I love investing.com. And my screen's all messed up now. So investing.com, I can just go here, Bitcoin USD. You'll see what I'm saying about 96.6 is what the spot price is right now. So if you guys want this, I'll post this in the chat. That's typically what I use to see what the true spot price of Bitcoin is. Again, the futures price is typically a little inflated, but over time, it's always a slight difference. And it probably dropped from when I took this screenshot. So now, why might the market be so strong this morning? Well, again, I want to remind you at 7 a.m., 8 a.m., even at 4 a.m. when my alarm first went off, which kind of caught me by surprise, the markets were up nicely. Now they've only gained strength, and here's why. So here's another great tool. Actually, let me go ahead and find that investing.com link again, and I'll show you how I set this up. So this is the economic news for the week. This is Monday, Tuesday, Wednesday, Thursday, Friday. So today is Thursday, obviously. 8:30 a.m. 3-star, very important number coming out. It's the initial jobless claims. Now, keep in mind, guys, 3-4 months ago, Wall Street wanted to see this number worse than expected. They wanted to see more people out of work than anticipated, simply because that means a slowing economy, more rate cuts to come. Well, now that script has completely flipped. Now the Fed is saying, inflation could tick back up. We don't want to cut rates as frequently. So now what people expect, what Wall Street wants to see, is a strong economy, which means jobless claims below what's expected. So this morning, they expected there to be 222,000 jobless claims. Report came out about 5% lower than expected. So that's good. That's a good sign here. Now, let me go ahead and show you guys how I do this here. I'll do this a couple times each week if I can get it to stick on the screen. Sorry for that big old ad at the top. Why is it not letting me? All right, well, so I'll go to investing.com. Let me post this link in the chat for you guys too. It's the economic calendar. We'll come down here. Typically what I do, just because there's so much information here, is I'm going to select this week. So I want the information for this week. You could do next week too. But first, again, there's a ton of information for this week. I just want to see the most important stuff. So I click this week. I'm going to go over here to filter. And again, this is how I personally do it. This is how I personally prefer. Let me squeeze this up a little bit. So what I'm going to do is I'm going to clear all the countries. I'm only going to go to the US news just because it's the biggest market moving news for us. It's going to clear a lot of the clutter. And then again, down here for importance, I only want the 3-star events, the most important events coming up, and then I'll apply it. And that's how I got that screenshot today. I can go ahead and see what's coming up next week. So next week, again, just some typical information. FOMC meeting minutes on Wednesday. Jobless claims again next Thursday. Unemployment rate is a big one on Friday next week. So again, great tool to have. I posted the link in the chat. If you guys need to see how I set that up again, all I did was say this week initially filtered out just for the US, filtered out just for the 3-star events, and then applied. So really cool tool. It helps give you some insights on why the markets might be moving, or Additionally, hey, do I want to hold a position longer? Do I want to hold it into the next day? Well, if we have GDP coming out the next morning, I'm up nicely. Maybe I'll take some profits. All right. So far, so good. We'll keep on moving. Let's go ahead and take a look at some of the charts of the week. This is just going to be a little section here where I've found data that I like. I'm just going to pick the top ones that I think are most relevant right now. So it's a new year, right? What is 2025 going to have in store? Well, this is really important here, guys. Typically, and I'm going to show you the data, but typically good years are followed by more good years. Uh, the momentum tends to cluster in the market. So we'll see here 4 years of great years, 20% returns, roughly speaking. Again, a 4 year period, 2 years, 2 years. That's what we're coming off right now is 2023 and 2024. But here we had a 3 year period, 3 year period, 5 year period, a bunch of 2 years. But look at this. This is what I really want you guys to see. And again, this doesn't mean every day is going to be an up day, but for the full year, so when it's December 31st, 2025, when we're looking back, I expect something like this. So here's the median S&P 500 returns after big up year. So if you have a gain of 20% or more in the previous year, which we did in 2024, typically we see that momentum carry 11% gain over the next year. So that's just the data. It's going to give you a rough idea of where the markets might end up at the end of the year. All right. That doesn't mean every day is going to be up day. Doesn't mean every month is going to be an up month. But as a whole, we're looking like what should be a bullish year. And I believe the data, I had it open on another tab. Don't know where I put it, but I believe it was about 63% odds that I was going to finish higher this year. But let's take a closer look. Let's look at this month and then let's look at this week and see what we can see. And again, guys, if I'm going too fast, you want me to go back so you can take a screenshot, let me know in the chat. I'll be happy to do that. Closer look. Here is our seasonality by month of the year. So January, February, March, April, May, all the way through the end of the year. We've talked a lot about Q4, how bullish it was, how we were able to make some nice opportunities off of that. August, September, typically bearish. Remember, we called that downturn in the markets called the bottom, wrote it up nicely. Well, January is another typically bullish month here. And not just that, if we're looking at Q1 going into Q2, very bullish altogether. So that's very good for us overall, seasonally speaking. Then they say sell in May and go away. All right, that's why you hear that slogan because May slows down, June slow, July's fine. Then you get this late summer drop. But for the time being now, we're focusing on January, typically a really great month, right? Now this year there's something special going on that we don't see every year, right? We had the elections, now we have the inauguration. So let's go ahead and see this because there's some conflicting data here. It's not all roses and peaches here for us. It doesn't mean the markets are going to go up all January long. This is a really important chart. This is maybe my favorite chart that I'm going to show you today. So again, if you want to take a screenshot, take it now. I apologize. There's so many lines on this. I couldn't remove it. I found it from the Stock Traders Almanac. Great resource. A lot of great information. But here's the two lines I want you to focus on here. So what you're looking at here is the S&P 500 seasonal pattern for the new, right after elections. So the inauguration year, which would be 2025, 2021, 2019, or 2017, sorry, and so forth and so on. Here's the important line. So I would ignore the black line, ignore the blue line. Let's focus on this green line. The green line is all post-election years. So you can see it in here. Again, I would take a screenshot of this, something to have on your desk all year long. We did this for the election year cycle, and it was pretty spot on. It was pretty scary accurate. It was really awesome to have on hand. So the green one is the all election year since 1949. This is your long-term average. So January, again, is a pretty bullish month. Slight dip, right? Slight dip, and then bullish, slight dip in February, and then a mega bull year from there is the average. Here is the other one I want you to focus on. This red line here, that's post-election year after the incumbent party lost. So basically, Democrats didn't win again, so that would qualify as this red line. This one looks a little bit different, a little bit more uncertainty in January, a little bit more uncertainty in February. But then at the end of February, we see that dip and rally through the year. Again, not straight up. There's some downturns. August, September. Remember, I told you August, September, typically not great months. That lines up here perfectly on both the green line and the red line. So the total average and the new party average. So there's a reason I really like this chart because this is a new insight that we can see that's very specific to what we're seeing this year right now. Now, of course, there's a billion different scenarios that were going on when all of the inauguration years happened in the past. They're not all going to be the same. We're not going to see this to a T, but I personally wouldn't be shocked if we see something like this going into January. I would actually like it. I'm going to talk more about that in a bit. So that is a great chart to have on hand all year long. Now let's go ahead and do a little market overview where we're at now, where we're sitting. Here's the S&P 500. I drew a couple lines on here that are my opinion, things that guys like Roger Scott taught me when I first started trading under them. So here we are, sitting well above the 200-day moving average. The 20-day EMA has not crossed the 50-day moving average in since August. So it's been a long time of this rally. Typically, again, we'll see this green line swing, rally, 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 swing, rally, rally, rally. It's been a really long rally. And today it'll probably stretch even more if the markets hold, which I hope they do. But here's something to note. Typically, you want to see the RSI, which is just a relative strength indicator. It's just a pretty basic indicator, but it measures the momentum in the markets in a pretty unique way. Typically, you want to see it. Let me just draw this line here, where the higher swings, lower swings are increasing together. So see how this is kind of trending upwards. Everyone see that trending upwards? That means we're gaining strength. And then notice the markets are also gaining strength. That's typically a good positive pattern to trade. Right now, we're seeing kind of what we saw in July, this divergence in the RSI. So notice here, this was a pretty steep drop, right, in September, but the RSI still made a lower or a higher swing low. So here was the August dip, big drop here in September, but it really didn't shake it that much. Again, another drop here in November. It never dipped below 30. We just saw it dip below 30 on this drop here, which really, in all reality, was not that significant of a drop. That would be like looking at this drop here and saying, "Oh my gosh, that's terrible." It ended up getting about twice as worse. But here on this first initial drop, we saw the RSI dip below 30, and at the same time, like you're seeing here, a downtrending downtrend on momentum on the RSI. So we're seeing that here, the downtrend on the RSI. Market's slowing. I'm also going to show you this. Again, this I posted in Telegram. If you're not in Telegram, you probably should be. I love it. I hope you guys all love it. I post all the nuggets and links and sources I find all the time in there, plus some free trades. But here's the S&P at a more zoomed in. So I just zoomed it in to here. And we have a head and shoulders pattern. So what that is we have a shoulder, head, and shoulder. Basically, what we're saying is market momentum is slowing. We swung here, we swung higher. Now we made a higher or a lower swing high, which means that the following swing high, here's a swing high. The next swing high ended up being lower than the previous. That's typically a sign of changing momentum. Actually, we saw it here too. A swing, swing, lower swing, drop. Why are their horizontal lines at 30 and 70? That's just going to give us a measurement. Good question, Howard. Howard's asking, why is there a horizontal line here on the RSI at 70 and here at 30? Those are settings you can make. Now, 70 and 30 is a standard setting, but this is going to give you a general concept of overbought or overstimulated markets or oversold. So when it flips to green here, that typically means overbought. I don't personally follow that. I like kind of what Roger does, following these trends of the higher swings and lower swings. Because you'll see like green here and it'll just keep going for months and months. And then red is normally a pretty good buying opportunity. I will say that. So we had red, great buying opportunity. Red below 30, great buying opportunity. Just the other day, red below 30. I think it's a good buying opportunity. I think we might get a better one. I'll talk on that in a moment. So, anyways, right now we have a head and shoulders pattern. Higher swing, lower swing, which typically means a falling market. I called that out in Telegram. Actually, right here we see this circle red. Hopefully you guys were able to avoid some losses there. This market fell about 3%. Now, ideally, and again, we could go higher from here, and that would be great. I would personally like to get another small flush out to 575 levels. I think that's where we have some good support right now. I would like to see that in a more drastic scenario. So I'd like to see 575 right in here, which is right around the 100 moving average, which I didn't show on this chart, but that's kind of the next support line. If we get a deeper flush out, 550 would not be scary. That sounds scary. It sounds like a 10% drop from the peaks, which it would be, maybe a little bit more. But that's just hitting the 200-day moving average. So it's not uncommon for stocks to trade at the 200-day moving average. We've just happened to not touch it for the last year almost. We've been soaring sky high. So a little Flush out to 575, I think is a great buying opportunity. If we go lower, expect it to go to about 550, which again would be, in my opinion, an excellent buying opportunity. Now, there is a temporary negative catalyst right now in the markets, and this is important. The markets always operate on catalysts. You've got to think Wall Street is always trying to bid the market where they think it will be in 6 months, right? They're not saying where is it at today, where's that tomorrow. They want to see where it's at in 6 months, and that's where they get their bid and ask from. So, temporarily, we have one negative catalyst that I see, and that's the bond market's reassessment of only one rate cut in 2025. So originally they said they were going to do 6 rate cuts. Again, because inflation is kind of sticky, now the bond market is anticipating one. So that's bad for small caps, bad for bonds. But again, that's why we want to see strong economic data. Whereas before they wanted to see weakening economic data, now they want to see strong numbers so that the strong economy can hold up in this negative catalyst zone. But that is a reason why we saw the Russell 2000, the IWM, sell off pretty steep over the last couple of weeks. These are the small caps. These are small companies. They need to take loans. They need to take debt to grow. When debt is expensive, it makes it very hard for them to make money. When debt is cheap, it's a lot easier for them to grow fast, make money, have good margins. Think about it like the housing market right now. With the mortgage rates as high as they are, mortgages are twice as expensive as they were 2, 3 years ago. It's going to be harder for the housing market to grow right now. Same thing for the small caps. When debt is expensive, it's not great. Now, you can see here the growth in the Russell 2000 over the last year, and that's again because Wall Street was anticipating rate cuts. Well, now that has flipped, and we've seen the whole entire Russell flip with it. It's already down about 10% from the peaks, a little bit more. But this is my personal take on it. Howard, there's a caution in getting the small caps. There could be, Howard. Yeah. My personal take here is buy the rumor, sell the news. So I wouldn't look at this and say let's short small caps by any means. I think that a lot of this has already been priced in. Like I said, Wall Street's always looking ahead. This was before Powell said that they were going to slow rate cuts. They already priced it in. They did a great job of that. So buy the rumor, sell the news. Now, I hope we get a nice 5% flush out from here, like I just showed you, but I'm going to be buying the dip. I'm not going to be buying puts or anything or getting worried about a crash. My guess is that we're already halfway through this pullback. So again, I showed you here. This is where we are now. I would like to come 575, meaning we're already halfway through the pullback. If I'm wrong, I think 550 is the next buying opportunity, which would be great. Now, here's something that's really important that I showed you guys on Tuesday as well. This is the fear and greed index on CNN. I think they do a great job of this using market internals to give us a calculation for where the fear and greed sits. I posted the link here in the chat. Right now, we're almost in extreme fear. I don't know about you guys, but when you are still trading at the 50-day moving average and you are sky high above the 200-day moving average, this is a mega bull market. I don't know why we have extreme fear right now almost. That's kind of a telltale sign for me right now. But here's what's important too. The put to call ratio, which gives us an idea of options trading. Options volume is options trader bullish or bearish right now. Right now they're still bullish. 0.81. So there's no like freak out. Typically, if you see a big spike like that, it's a good time to buy. These spikes mark buying opportunities. So again, that was that August dip. August 5th was the peak of the spike. Great day to buy. November, this was probably just because of the election volatility. Traders buying puts out of fear to protect their accounts. But here, early September, probably a great time to buy. Right now, we haven't seen that spike yet. So that's why I think there still could be more downside to come. And let me go ahead. Let me move this one down. And seasonally, again, this is a chart to save. We should see a dip here in January. Just speaking historical data. Don't be shocked if we see a dip here in January. That's just what the data shows. I like it. I like a good buying opportunity. I think Chris said it best. I can't remember how he said it, but it's much harder to buy when stocks are up here than it is to buy when they make a nice dip. You can feel a lot more confident. That would be great if we got that in January, in my opinion. So here's my note for you, my nugget for you. By the time the headlines and the news are screaming a crash or recession or is this the end, I think that's the time to buy. We've seen it happen over and over again. When the majority of news headlines turn bearish, it's the best buying opportunities in the market. I should find that chart. It's hilarious, where it basically looks at the percentage of news articles around the stock market. When they flip bearish, it's time to buy. So that's something to keep an eye out for. Now, let's go ahead and continue on. Let's look at the different sectors. So within the S&P 500, there's 11 sectors. I added a few more in here just to give us a little more specific view, like the semiconductor ETF. Obviously, NVIDIA is a big thing there. AVGO, AMD, Micron, all of those are in there. But here are the different sectors. I had Bitcoin in as well, but we have 11 sectors. I'm not going to go into detail about all of them, what they do, but you can kind of see, you can kind of get a good guess. So here's their ticker XLY, consumer discretionary. Think stocks like Nike, Lululemon, the things that people don't need to spend money on, more the once in life, not the needs. Communication, that's going to be like your Metas of the world. Maybe I think AT&T's in there. I can't remember. XLF is financials, technology. Retail is XRT. That's not one of the core sectors. It's just an ETF that we can follow. Industrials, utilities, consumer staples. So these are your Walmarts of the world, your Kellogg's cereal, the things people need, not what they want. You need food. That would fall in the consumer staples category. Real estate, energy, healthcare, materials. So these are the sectors. Again, this was how I was trained to look at them, the relative strength of the sectors, where basically you look at the 1 month performance, the 3 month performance, and the 6 month performance, average it out, and you should see the ones trending the best and the ones trending the worst. So I'll even pull up my chart here and show you guys. We got 3 minutes till the market's open. Again, I'm not trying to rush to get into a trade right now. All right, so XLY would be the strongest because we took the average, and it is the best looking one. And again, you can see there's some strength there, right? We can all see strength on XLY. Let me just do this, make it easier to see. The weakest is we'll do XLB because it's a true sector. And you can see the weakness there, right? Let's see XLV. Oh, that one's been getting hit. XLV. So if you're looking at a 6 month view, right about there, you can see why it's ranked so low because it's so weak. Let's look at XLC, another really good one. Look at that strength, that strong trend. So that's why we like to look at sectors this way. It's very beneficial to at a glance see, hey, if I'm going to trend bullish with the market, which stocks do I want to be invested in? Which sectors are the best? I probably wouldn't pick an energy stock. It's going to be lagging, typically speaking. Markets have been going higher. Well, these have been falling. Probably don't want to buy an energy stock. So right now we have XLY, XLC, XLF from top down as the strongest. Now Bitcoin's the strongest. You guys probably know that by now, but if we're looking at the individual sectors, this is what you want to look at. Let's also overlay some seasonality here, right? Let's see which ones typically do the best in January or February. See if we can get a little momentum run. So like information tech right here. Technology typically has a great month in January. Consumer discretionary, that's at XLY, typically has a great month in January. Healthcare does too. Now, I probably wouldn't pick healthcare. Why? Because remember, it's down here. I don't want to have a good piece of data and a bad piece of data and try and hope for the best. I want them to line up. So if we line them up here, these are the ones with the strongest seasonal and the best relative strength right now. These are the ones with the worst seasonal and the worst relative strength right now. So top ones I'm going to be looking to trading is consumer discretionary, financials, and tech. Those are the tickers for the schedule or wow, for the sectors. If you want to make a little basket of that, I think that'd be cool. Take a little chunk of your portfolio, and for January, put a third in XLY, a third in XLF, and a third in XLK. Again, historically, no one can promise future returns, but historically, that's the best thing you can do for January right now. Now, the ones that you might want to avoid are utilities, consumer staples, and materials. Again, this is just based on our relative strength. They're lagging, and seasonally, they're worse off than most of them. I like XLU here. Look at this. We don't just have a negative January, we also have a negative February. It's going to show that continuation kind of pattern versus, let's say, like materials, which I did highlight there because it's so low on the list. But this one, the momentum flips going into next month. And this is, again, this is a chart we're going to review every single one of these sessions just to see where we're at. This will be updated every single session as well, each Thursday at 9 a.m. Now, the market's open in just a minute. So we'll cover some cool trades here in a second. Real quick, Bitcoin update. Nothing major here. Bitcoin's up nicely in the pre-market. Let me see where it's at now. As we have 19 seconds till the market's open. In my are these available for download? We can probably make a version of these slides available for download. Deanna, remind me to do that
Oh,
after
yeah,
the fact.
you do that. Yep.
My overall Bitcoin update is I always think it's a great time to buy, especially right now on this dip we have. And there's the opening bell. I'm not sure if you had heard it through my computer, but Bitcoin's up 3% today. Love to see it. Here's a little dip we have. and it's a great time to buy. I hope we go higher from here. Now, again, with the seasonality in the markets, if the markets head lower, I wouldn't be surprised if Bitcoin does temporarily. But long term, I'm still very bullish. This shows that Bitcoin should typically peak based on the previous cycles in at September or October, and based on the previous trends marked out here. Again, that puts us around the 150, 160, $170,000 range. That's almost a double from here. So it's a great time, in my opinion, to be invested in Bitcoin. This is my own personal take. This is where I have my own money at as well. Again, if you're looking at the sectors, it's been just demolishing all of the other ones. So that's my little Bitcoin update for you there. Nothing's too specific or crazy. This is something important to look at too. Are there any earnings coming up? Anything we should be aware of? Well, we do have a little bit of breathing room here for the next 2 weeks. Some smaller ones next week. It's going to be in that third week of January that we're going to see the banks start to kick off earnings season, which they always kick off earnings season, and then we'll start to get into the other sectors, discretionary and technology, all of the big market moving names that we'll keep an eye on over the next few weeks. All right. So let's get into the nitty gritty. It's 9:31. Markets are open. Let's get some trades going. All right. Let's start off with an Apex top signal that I like. If you guys have used the Apex indicator, you know what I'm talking about. If not, I'm probably talking about it again here soon. It's a way. Sorry, let me clear my throat again. It's a way that we can monitor some of the best stocks in the market. And it doesn't use daily charts. It doesn't use minute charts. It uses weekly charts. It basically looks at the week's worth of momentum and sees if it's an abnormal breakout or a previous breakout that typically leads to bigger gains. Now, with the markets pulling back, Amazon did have two entries. Love to see it. Little pullback here, but the price target here on Amazon's 181. Wow, Amazon's up 2% today. Rocking and rolling. Holy moly. Wishing I bought that one on Thursday. Let me see how. Apple is lagging. That's no good. All right. Back to Amazon. I really like this one right now. It's a great stock. Had a nice little dip for us. Uh, Stop price 181.96. Profit target 254.75. This is something you can buy basic call options on. So, Joshua, if you want to buy some basic call options here, you can do that with Amazon. Again, these are your profit targets. Stop price. Everyone see that? Everyone got it? You get your screenshots and everything. I'll keep moving on. So this is our weekly momentum candle program. And we have a good breakout on Amazon right now. The hot sheet pick. So if you guys aren't familiar with the hot sheets, I'll drop this link in here. It's one of our free plus shipping offers where I'll send you a sheet, cheat sheets. Where did I put them? I don't know. I think left them at home. But this is just a seasonal pick. So the hot sheets give us a nice little look at seasonally what are the best stocks to own when. Well, on January 6th, Apple enters its hotspot zone, kind of like on the clock stocks. If you guys are familiar with the profit dates, same sort of concept. So, Apple typically is a great buy on January 6th, and you hold it for about a week till January 12th. On average, it's gone up 100% of the time, and it's produced 2.7% gains during that week. Average options return over the last 10 years is 54%. Again, Joshua, that's just basic call options. If you want to trade basic call options, I think it's 30 to 60 days out till expiration. The monthlies, one or two strikes out of the money, get you about 54% there, typically speaking. Now, I love Apple as a long-term buy and hold right now. It is down today, which is a bummer for me, but that's okay. Sweet. Thank you, Deanna. Oh, yeah, the wrap order training's in there as well. So far we have Amazon and Apple. I'm going to give you guys some momentum picks from Newton, but I'm going to specifically give you some short picks because, again, historically, right now, we might see a little dip. I don't want to just give you bullish picks. So, number one pick short, CEG, Constellation Energy Group. This one seasonally is bad. Technically speaking, it's in a slight downtrend. Utilities are bad seasonally. Like I showed you, XLU is typically a lagging sector right now, and seasonally it's a lagging sector. This one gapped up huge on the Microsoft news of the nuclear energy, and it looks like it's trying to fill this gap down here. Wouldn't be shocked if CEG comes down here to the 210 levels right now. So go ahead and you can write that one down as a short potential. It's up a little bit today, so it could be a good opportunity to buy some puts. Another utility stock that is not looking good, AEP is the ticker. Again, this one's in a downtrend. Technically speaking, it looks bad. Newton has red negative momentum on it, and as you can see, negative momentum typically means to a market drop. This one's also up slightly today, so it would be a good one to buy puts on or hedge yourself with. And then the third Newton pick is FCX. This one is a materials stock, which again, I'm lining up seasonality and relative strength with the indexes. Um, let's see where this one's at today. Up slightly today, but again, look at this. Momentum turned red, and it's just been dropping like a rock. I expect seasonally that this one will continue to fall. So I hope everyone got these picks. Bullish, I like Amazon. I like Apple. Again, these are the specific dates for Apple. Bearish, I like CEG, AEP, and FCX, just based on the momentum. All right. So let's go ahead and check the market open. Let's see where we're at. See if there's any cool uh, nuggets that we can pull from. And guys, I've been talking nonstop this whole time. So if you guys have anything, post it in the chat. If I can get this to get bigger for me, that'd be awesome.
Oh, you have a question on YouTube if you're ready to take it.
Oh, for sure.
Doug wants to know, how do you start trading any of your services in a small account? Do you have any recommendations for like the newer traders?
Well, I guess it kind of depends, but I would always say start small. If you have a $500 account, a lot of times my wrap orders I give you are about $50 to enter. Just do one contract. It might not seem like a game-changing amount of money if you make 50 bucks a week, but you do that a few weeks in a row, you not only does your account start to grow, but your confidence starts to grow as well. I would probably never put more than 20% of my account in on any single trade. The only rare exception where I might is if we get one of those big market pullbacks, and I feel very confident. Again, it's a lot more confident entering on a market pullback than it is when we're hitting all-time highs every day. So, hopefully that answers your question. Start small. You can always start small and go big from there. Apple is down. Oh, Apple down 2%. I think tech. Yeah, well, let's see if the QQQs. Oh, they're flipping on us. Yeah, a little nosedive at the open. We'll see how it shakes out, guys. This is the first trading day of the year, too. So again, we're gonna have a lot of orders, a lot of craziness going on right now. But yeah, there's that kind of that downtrend where we saw the dumps, pop, dumps, pop, dumps, pop. We'll see if we get a dump here and a pop again. Again, no telling what'll happen, but we're gonna play it. All right, let me go ahead and see how everything's doing today. Pop this guy over. Flip this over to the main. Oh, so look at this, the volatility index, the VIX, which is our fear index. It was negative this morning at 9 when I posted that screenshot in. It is completely flipped now. Gold is up. QQQ, which was leading the pack, is now flat or slightly down. That's an interesting rotation here at the open. Again, I would love it, love it if the market shot straight up from here. My target that I just told you about, 575, is right here. And I expect us to hit it by about mid-month would be ideal, and then we turn from there. And that's going to be most of your stocks that'll follow with it, in my opinion. Let's go ahead and go here. Breakouts. Here's some other good stocks right now at the market open. Tapestry, Ralph Lauren, Cisco, which is interesting. The thing I don't like about Cisco is you can see the slowing momentum here. Kellogg's, I would avoid this one. It's merger and acquisition. AXP, that's actually one that we're in right now. Look at that beautiful trend. This is a good stock to buy and hold. In Expedia, EXPE is the ticker. Mel, kindly answer above. Sorry, Mel, I missed your. Mel, I'm going to come back and look at Apple here in a bit. It's down at the open here. This might be one that we go into again because it's not typical to see Apple fall 4 days in a row. And when it does, typically you get it moved the next day. So that's not even a 4 day in a row one. 1, 2, 3, 4, and then you get a pop. So Mel, with Apple, because we're getting such a big drop today, that might be when we buy at the close. Man, this might be when we buy at the close today. All right. I got about 15 minutes here. So let me go ahead and do the opening playbook trades. As promised, guys, I'm going to give you guys a few Mel, as a moonshot option, should I close it? You could, Mel. I'm going to review it after this call, after we're off here. Opening playbook trades, as promised, guys. Each week, I'm going to give you three trades. They're all going to be options. They're all going to be my wrap orders or elite trades. I don't love buying basic calls and puts. It's not how I personally trade. So I'm going to try to, if you're new to spreads and it scares you, I'm going to try to walk you through it again. Deanna can post a link for the full training. So you guys can watch that and watch it in half speed, watch it in three-quarter speed, go forward, rewind, whatever you need to do. But it's really, really important training. I think it'll really open your eyes to what I think is the best way of trading options. Silver's looking good today. It's probably popping with gold. Oh yeah, silver up almost 2% today. Good eye, Jim. Here, let me go ahead and jump through these opening playbook trades, and then we'll go ahead and look at the markets again. So I'm going to give you three trades each week. There's going to be a monthly pick, a weekly pick, and then typically I'd give you an overnighter trade, but because of the special situation today, which I'll be sharing at 11:15, I'm not going to do that. So I have a special bonus up my sleeves today. So let's go ahead and do the opening playbook trades right now for the monthly breakout. So this is a stock that I like for a month hold time about 4 weeks out. Lululemon is the stock. I haven't said this one in a long time because it's been in a nasty downtrend. But let me go ahead and flip this over here. And why is it not working? Trying to pull up Lululemon's chart. All right, here you go. Lululemon. If you look back here, this is why we have not been trading the stock. Red momentum, heading downwards, no fun. It just flipped over to green recently, and it just had a nice little pop. And again, so not only is this right now a strong stock on a relative strength focus, I mean, it's up, what, 50% in the last few months, but also remember, consumer discretionary, this is why we look at all of this. Consumer discretionary is leading the pack, and it is seasonally the best one to have. So that's why I like Lulu here. So for the monthly breakout here, I'm gonna walk you through. Like Lulu, let me pull up my options calculators. Which again, if you're a member of any program, you can get access to those. They're included in every single program we do. Uh, Shaniqua will be posting it in here. Let me just open up the Hot Sheets portal so I walk you through the calculators as well. Huh. All right, let me just open up. There we go. All right, Lulu is one I like. Like I said, I'm going to trade monthly options on this, not the monthly expiration, but about 4 weeks out from today. So we can just look here. 1, 2, 3, 4. Let's make sure that we have good volume. It's not super great. Let's see about this one. The monthly expirations are going to be the best. It's probably just lowered today. Let me go. I'm going to go ahead and try and get filled, but I'll post it in here for you guys. So I'm going to take the January 31 options here, and I'm just going to do my typical wrap order. So with a wrap order, we're buying a call. Again, if you were to buy this Lulu call as is, it would cost you about $2,000. That's pretty wide bid ask. Let me maybe go out to February 21st. That's still pretty. All right, we'll just go ahead with January 31st expiration. I'm going to buy the 380 and I'm going to sell the 390 here because that's going to wrap the price perfectly. Where we're going to buy the one below, sell the one above, and try to put this price in the middle of the two strikes. So again, what's the middle of 380 and 390? 385. And we're pretty much at that. The debit price right now is 480 or 448. And again, I'll pull over the calculators. If you're new to this, don't worry. We've got the full training. Deanna can share it with you guys to follow along. But here, I'm just going to punch in this same data here in the calculators. This is in all the members portals. We're going to be buying the 380, selling the 390. Let's just say one contract for now. And the net debit is 455 right now. I'll punch this in here. So this means we have a 120% ROI potential here if Lululemon gets above 390. So it gains about $5 from here. That's what, about a 1.4%, 1.3% move over the next month. Not a big move. The break even calculation is if Lululemon basically falls 10 cents, we break even, which again is pretty shocking. If you bought basic call options and Lululemon fell, you definitely lose money. So that's what's really cool about these elite trades and the wrap orders. So right now I'm going to post this in the chat. Price is moving again. It's probably just waiting for market fills. You can see the bid ask tightening right now as we speak. But let me go ahead and post this in the chat. Ticker is Lulu. Actually, I'm going to type it up here and then I'll just copy and paste in the chat. 31 Jan 25 expiration. Buy 380 call. Sell 390 call. Calculator has us, it's right now a $5 debit, which will be 100% ROI potential. Now, here's a cool new thing I put in the calculator. Some of you guys like taking profits early. Say you want to do a profit target, you can put in here. I should probably flip it, but it'll tell you if you want to set a good till cancel to sell it at 750, that'll give you 65%. If you want to sell it good cancel at 7, 54%. So you can play with it based on your entry. So you entered for $5, exit for $8, good to cancel, that'll give you 60%. So I have an optional profit target box here in the calculators. If you don't want it, just leave it blank and know where it's there. So let me go ahead and do this. I'm not going to put a profit target. Gaston, I haven't placed a trade yet. But let's say you want a 50% profit target at $5 debit, you would set it at 750, good till cancel to sell it. I'm not going to do that, but I'm going to post this in here for you guys. So here's our monthly breakout. I will just track these for fun for us. I'll pull Lululemon back over here. It's currently at 510. If you guys already got filled while I was typing all that up, you got better fills than I did. $5. Let me go ahead and set it. If we don't get filled, we'll adjust it. Look at this. The small caps are taking off right now. Bitcoin's taking off. But the QQQ is lagging. So kind of a flip there. All right, let me try. See what's at now. 520. I'm just going to leave it hanging for a bit here. It should fill given the price of Lulu. Again, we're just seeing this bid ask start to tighten again. This is why I typically don't like trading right away at the open because these options are trying to figure themselves out at the moment. But it's definitely tightened. They're about $1 spread right now versus what it was $3 at the open. So there's a monthly breakout. Everyone see that in the chat. Hopefully y'all got it. So I'm going to give you a monthly pick. I'm going to give you a weekly pick. And then typically I would give you an overnighter one. Today I'm not going to do that because we have a special presentation today to talk about other overnight opportunities, which I'll cover more details there at 11:15. So I'm going to give you a bonus trade today. Sylvana, why a $10 spread versus a $5? That's a great question. So if I'm looking at Lulu, I want to put this right about in the middle. So if I did a 380, actually, let me look. This probably won't be as good of a price. So this is a $5 spread here, but Lululemon's really close to that top strike, 385. So there's not much, there's a lot less risk, which is good for us, but that means you're going to get less reward. So here they're giving you $3 entry on a $5 strike. So our profit potential there is only 67%. Versus if we do the 390, again, we don't need a big move. We can now get a lot more meat on the bone, depending on what we actually get filled at. By doing this. And again, I like these higher price stocks because a $5 move for Lululemon is about 1.3% if I'm mentally doing the math right, which is not a big move at all. It's not like we needed to move 5% or anything crazy. We only needed to move 1% to double our money. Gaston said he's filled at 515. I'll give that a try. Yeah, it filled right away for me at 515. All right. Let's keep moving. I'm going to run out of time here if I keep going. We have a hard cutoff here at 10 a.m. So we got 10 more minutes. The weekly momentum play. This one's a cool one. I'm excited about this one. It's a stock I haven't traded recently, but one that I've always kept an eye on for a while. Visa. Again, why do we like Visa? Well, financials are a hot sector. Seasonally, they're hot. Relative strength, they're hot. Visa is one of the top stocks within that sector. So we're looking at the strongest horse. We're looking at the strongest pack of horses, and then we're going to take the strongest horse from that pack, and that's Visa. Also, crypto's hot right now, right? Bitcoin's up big today. There's a lot of speculation, a lot of excitement around it. Visa's kind of winning on that crypto front with all their payment processors working with the different cryptos with Bitcoin to get that working in their payment program. So I think that this is going to be a good stock that we'll see continue to climb, especially if crypto does as well. It's up a little bit today, but let's go ahead and type in some plays here. So the ticker is V for Visa. Again, This is going to be a weekly play, so I'm going to do the weekly options, which are 10 January 25 expiration, right? So let me pull this over here. Again, I like that it's a $300 stock. That's great. So we're gonna go here because this is technically the weeklies, but those expire tomorrow. That's not what I mean. We're gonna do the one for next Friday. Uh, Liquidity so far is solid. And again, we're just gonna wrap it. So right now it's 317.68. So we could do a 315 and 320. Again, I'm gonna type this all out for you. I'm just gonna get an eyeball for the prices. It's an okay price right now. Let me try this one. This will be a little bit riskier, so it's less. We need Visa to gain what? $2.20 from here. So less than 1%. We needed to move 0.67% for us to get a great opportunity here. So let me type this one in here. We would buy the 317.5 strike call, sell the 320 strike call. Right now, the price is 123. You can go ahead and try and get filled for that if you want to. I'm going to do this all for you guys right now. We're going to put it in the price bought, 317. The price sold, I just put it in the same box. The price sold was 320. The net debit right now is 126. 1.26. So again, we're getting a 98% return if Visa gains about $2.30 from here. That's about a 0.6% move in a week. It's up 0.5% today. So we just need another day like today, and then for it to hold steady, we should be on pace to make some really great money here. So I'm going to go ahead and get my trade in, put one at 126. I'll also put one lower because that'll probably be filled right away at 126. I should be able to get filled a little bit lower. We'll see. I'm going to get a few of these, see if I can kind of stagger my entry. So filled right away at 123. Sorry, I forgot to post this in the chat. Here you go, guys. I'm gonna put 125 debit, 100% ROI. Profit target. Actually, I'm gonna do a profit target just to show you guys how to do it. I'm gonna set a 50% profit target, which means I will be setting it at 1.25 times 1.5, 187, 188 GTC debit. Actually, that's a credit. Here it comes in the chat. Everyone get that trade. So here we go. Again, we're going to go to the 10 January expiration. I'm going to buy the 317, sell the 320. I've already got filled on those a few times, but again, you probably still can get filled instantly at 125 just based on this price. You should be able to. Let's see. Well, if not, we'll wait a minute. But what I can do now is say I did one contract and I want to set a profit target. I can then come here to sell, do the opposite of what I just showed you. And then I'm going to take it to that profit target price. So I said, let's do a 188 profit target. That gives us about 50% gain potential here. And I want it to automatically fill. So we just do the opposite of what I posted in the chat. Once you get filled, move your price to where you want it. So I want 188. That'll give me a 50% gain. I want a limit order, which means it just waits for the price to get there. And I'm going to set this GTC. That means good till canceled. So if it happens tomorrow and I'm not paying attention, it'll fill me automatically. Really cool. So let me go ahead and send this off. And it's just going to sit there. It's just going to sit here in the top of my trades, right? And then if it fills, it'll come back and fill for me. Everyone good there? Good to move on? Do you guys kind of see, Mel, is it good to set a profit target? It can be. It's just more so if you want a little more peace of mind, Mel. I'm young. I like to risk it for the biscuit. I like to go all the way for the big profit. I typically don't set profit targets, but I know some people like it where it's like, hey, you know what? If I'm up 50%, let me take my money and run. There's nothing wrong with that. Do I set a stop loss? Again, I typically don't. Every time I've tested it, it's worked better without stop losses, without profit targets, but there's going to be more volatility. So if you want to set a stop loss, you can do that. And then again, whatever you want it to be, if you want it to be a 50% loss or 20% loss, you just run the numbers there. I probably could build out these calculators a little bit more for you guys to make it easier for you guys to set stop losses and profit targets. Deanna, again, that's something, if you can remind me, that'd be great. Look at this, QQQ's flipping back. This is why I said I don't typically love trading this opening window. So dipped, coming back. Hopefully we get a nice little rally. Let's see what Apple's doing. I can't believe Apple. Little bounce, but not like we want to see. Amazon, look at that. Amazon showing real strength right now. It's a stock I really like right now. I really like Apple too. And I'm a little bit scratching my head right now at what's going on with Apple, but we'll let it play out, see what happens. AXP Nate making a nice little pop here. That's great. That is great. All right. As expiration is the SL. We don't need. I'm not sure what you're asking, Mel, about expiration, the SL. Everyone able to place the trades, follow along? Anyone having issues? Kathy, I use Thinkorswim.
Priscilla on YouTube wants to know, is the trade buy to open and sell to close?
The trade would be buy to open and sell to open. So let me go back to Visa. Can't fill Visa. I would say let it sit a little bit. So here, buy, sell, both a debit. Or it should come out in net debit. Oh, Visa's moving. That's probably why. Yeah. Again, this is why I typically like waiting till 10. Um, yeah, Visa is on the move, which is good. Let's see where Lulu is. Lulu, let's see. Anyone getting filled on Lulu? 563 is also on the move. It's just because these markets opened lower and then bounced higher. Robinhood is terrible on these spreads. James, you said it best. That is exactly what I would agree completely with that. I used to use Robinhood all the time when I started trading these wrap orders. I said I got to get off this app. It's terrible. Oh, nice. You got in Visa. Got in Visa. Nice. Doug, I don't think Visa price moved on all the orders. There was 175 people here today. I don't think we're moving markets. Oh, nice, Keith. Got filled Lulu 510. All right. Next up, typically what we do here is an overnighter trade. Why I like it, why I specifically said let's trade Thursday mornings is because options expire tomorrow. So let's say we liked Lulu for an overnight trade. What we would be doing is selecting this Jan 3rd and doing an option here where Lulu would need to make, a similar move like today, and then we can make double our money. I wonder what's that now. There's no way. So this is something kind of like what we might do. This has to be off, but basically we'd say, hey, in this is an example, this is theoretical. Lulu looks good, looks like it's good for an overnight move tomorrow, whether that's a momentum move higher or kind of like what we've done with the biggest trade of the year, where we're trying to fade stocks that are moving too low, too fast. And we look for a bounce back overnight. Ideally, if we hit the next day, we'd make about double our money. And again, typically you don't need a big move. In the case of Lulu here, you would need about a 0.3% move to double your money. Now, I'm not going to do that here because I'm going to wait a little bit closer to the close. Again, to be determined on this trade. We'll be live at 11:15, so here in about an hour and 15 minutes, talk you through that one and how I'm going to take advantage of that. So now, let's see, let me answer some questions. Mel, do we need to place the order now? If we do it later today, can we do it? Absolutely, Mel. The thing about these trades is it, I can't predict the future. I can't tell you Lulu's going to be higher or lower tomorrow. I like without a doubt. So maybe I get filled today. You wait till tomorrow, and Lulu dips a little tomorrow. You get a better fill than I do. Maybe next week you come back, I get filled today, and then tomorrow you wait to fill, and Lulu's higher, so you get a little bit worse fill. It's going to work like that, in my opinion, based on what I've seen. I typically, again, like placing my trades after 10, kind of like after 10:30, just because we get so much volatility. Nelson, you have 200 shares. The trade broke it up in the covered call. Cannot see the call position clearly. Well, to do. Nelson, I'm not exactly sure what you're going through right now, but if you give our team a call, I know Chip is a great one to talk to, and we've got a great team who can kind of walk you through if you have questions specifically regarding a trade that you took. Anyway, so we're not going to do an overnighter trade this morning. If you want to be part of the next overnighter trade, tune in here in about an hour and 15 minutes. I'll be live. Deanna, that's the correct time, right? 11:15.
Yep, 11:15, but actually it's going to be this room. So if they
Oh,
just hang out, if you're on YouTube, I've posted the chat to join the Zoom. Sarah, who's going to be moderating, is going to take over the call. We're just going to play some music, answer any questions you guys have. So if you just want to hang out in this room, we are all good.
awesome, cool. So as I said, I'm going to give you three trades. So I'm going to give you a bonus play here. This one's going to be a little bit more in detail. This is a two-way play on the NASDAQ. Again, guys, let me scroll back up here. Seasonally, it looks like we should go lower, right? But we also have some conflicting data, if I can find it. Here we go. January is typically bullish. What are we going to do? We don't really know. It could go either way. I'm going to give you guys a trade where we can make about 20 to 30% on our money as long as it goes higher or lower and doesn't stay flat. So I'm going to have to pick this up in real time because I couldn't do it yesterday when I was preparing the slides. So what I'm going to do is I'm going to go to the 17th January expiration. And what we want to see is we're going to want to get a net debit. I'm just going to select some options right here just to see where we're at. See, 90. We want a net debit of about 70 cents here, where we don't need a huge move. So let me go 1% out, and I'll explain this in a moment. Let me first select some options for us. Oof. I have to go further out. It's kind of hard when I got my screen shrunk. 38. Let me see. All right, this will be a big one. Let me tighten it up a little bit, and I'll explain it, like I said, in just a minute. 'Cause I'm having to pick this in real time. 8, 507. All right, here we go. Let me just make sure my math is right. So what I'm going to do here, and let me type this up for you guys. I'm not going to place the trade yet. We're going to use the ticker QQQ, and this is a little bit more in depth. I typically don't trade this way, but I thought it'd be fun to just have some fun here with the volatility ahead. So we're going to use the 17th of January expiration. It gives us about 2.5, 3 weeks. And this is going to be we're just going to do an elite, a debit spread to the upside and a debit spread to the downside and hope that one wins. And if one wins, it'll pay for the other one and then plus some profit. So I'm going to use the buy 522 call, sell 523 call. And we're also going to, that's probably going to jack up my formatting actually. At the same time, we're also going to buy the 508 put, sell 507 put. So this is a 1.5% move. And I'm going to set a target here at 85. Target. Let me just post this in the chat and I'll walk you through it. So there's a little bit more complex. If it's scary, maybe paper trade it. But I'm going to walk you through why it's a cool trade to take. So here it is. Right now it's trading at 67 cents. Basically, let's simplify this real quick. Uh, um, so I'm going to simplify it. So what we're doing here is we're going to buy an out of the money debit spread. I call this an elite trade on the QQQ. Basically saying, hey, I think the QQQ is going to go at least 1.5% higher from here, right? So let's look at it here. I'm going to take Newton off just so you can see it a lot easier. So basically, we're saying by January 17th, the markets should get to the NASDAQ should get to right here where my crosshairs are, right? If the markets get here, we win. That's what this represents. Now we're also going to do the same thing to the downside. We're going to sell the 507, buy the 508, and now we have an out of the money debit spread with puts, which basically say either the markets are going to get up here by January, right where my crosshairs are. They'll move up there, which is not a big move at all. Or they'll fall below here. Again, not a big move at all, right exactly where my crosshairs are. All we're saying is it's going to go one of two ways. It's not going to stay flat. And if so, we can make some good money. So let me go ahead and place this trade. Right now, I'm just going to put it at 70 cents, see if I get filled. And then I'm going to do the same thing where I'm just going to flip the exact order I sent you. So once I get filled, I'm going to wait for us to get filled. Um, but I'll just flip it. And then I would just set a, again, limit, good to canceled at 85 cents. And so given our current prices, we'd get 85 over 70 entry. It's about 21% return on investment. And it should hit if QQQ gets outside of those prices at any point here. Would it net off and we don't get any profit at all? No, Mel. That's not a bad question. That's a really great question. Um, this is your total entry price. Total entry price here is 72 cents. The most it could be worth at any point is a full dollar because one's going to be worth zero and the other's going to be worth a dollar. So again, that would be a dollar maximum profit, a maximum gain would be selling it for a dollar divided by your entry price, whatever it was. So say you sold it for a dollar and you paid 72 cents for it, which it is right now, you'd make about 40%. Does that make sense, Mel? I don't have a calculator built for this. I thought of it last night. I'm like, this would be fun. Definitely will send a copy of the replay, guys. So let me try and get filled for 71 cents. These might just need to sit for a little while. I'm going to try one at 72. Oops. I went backwards. So I'm going to call. All right, let me select these again. So we'd buy the 522 call, sell the 523 call. At the same time, we'd sell the 507 put, buy the 508 put. Again, all we need now is the NASDAQ to either finish above or to go above here or below here by this time by 117. And then I'm also going to set a limit order, good till canceled, to give me profits early if we get there earlier. All right, so I got one filled. So now I'm going to show you how to do the good till cancel order. Again, you just do the opposite of what we just did. So you would sell the 508 put, buy the 507 put. You would sell the 522 call, buy the 523. I'm going to set it to 85 cents. They're going to be about 20% profit. I'm going to make it good till canceled. I know I'm moving fast. There will be a replay, guys. Everybody can access it. So if this is your first time, this is a more complex trade I typically wouldn't do. I just want to share it with you guys for fun, to show how we can win both ways, assuming there's market moves. So here is going to be my profit target order. Since I got one filled, I'll just send it and it'll just be sitting there until it gets filled if that does happen. So that was a lot. Hopefully some of you guys were able to follow that. If not, again, the replay is going to be online. It'll be on YouTube and we'll probably just YouTube, Deanna.
Sorry. Yep, and I'll post it on your Telegram.
Okay, cool. So you guys will get the replay. Mel, so the second option only do if the call is filled. I do it as one ticket, Mel. So I do the calls and puts together, and then after that fills, then I place that second order, the good to canceled. Do I do two separate orders or one? I do one order. Thanks, Kathy. Well, that said, I'm already over on time. Remember, guys, in about an hour, it's going to be in this room. We're going to have the overnighter trade set up for you, based on a little market phenomenon that happens at the end of every year and the beginning of every year. It's playing out perfectly today. Now, Apple isn't helping me out, but as predicted, who was at the class on Tuesday? As predicted, I told you down, down, down. Tax harvesting. We should get a pop today. Sure enough, we did. QQQ's popping nicely today. IWM's popping nicely today. Everything is popping nicely today, as predicted. My good friend Apple is not. Oh, coming back. Let's see how AXP is doing. AXP's up a full percent. This was our other trade. Should be up nicely today. I need Apple to come back. It's killing me. I almost did Amazon because it was another one that registered. Man, I wish I would have done Amazon. But we'll see how Apple does. It's got to be down on something. Worst case, if it's a laggard, we might do it again. But more information on that Ooh, look at this. AXP is also a breakout stock too. Cool. More information on that at 11:15 here in an hour. Now I'm going to leave this open for about 2 minutes for a Q&A. Again, sorry I went over. Typically, I'd want to do about 10 minutes of Q&A, but I know I've been told I have to get out of this room by 10:15. And also, guys, give me some feedback if you had some fun today. Post something in the chat. If you liked it, if you hated it, let me know if you hated it. We're going to be doing
And I'm
this
watching
every.
YouTube. Mhm.
What's that?
I said I'm watching YouTube, so if anyone has any questions there, you can drop it.
Awesome. Awesome. Thank you guys for the good feedback. So far, all great stuff. So far, no one hated it. I'm interested if anyone just really didn't like it. But a
You
good
actually had
show.
Lance
Good. What's
watching
that?
for a while. You've had Lance watching for a while. He left some comments on YouTube.
Oh, really?
Hmm.
There's James said, "Oh yeah, I hated it." LOL. That's funny. Awesome, Howard. Well, guys, again, any last questions? I've got to get out of here in 2 minutes. Happy to answer them. I'm going to just track these for us for fun, so we kind of see how we're doing each and every week. Again, we're going to have some of this material we'll cover again. So, like, this is something you're going to see all year long. I'm going to pull up this chart almost every single week. The more timely stuff like this, this will be replaced every week. We're going to get a new update on where we're at in the time, but this is something we're going to be looking at all year long as well. Want to see the seasonality. This will update every week though. We're going to see who's leading the pack with the sector. So it'll be a lot of fun. Again, let me just run through all the stuff I gave you guys today. I saw a question here in the chat: is Amazon still a good pick? Um, I really like Amazon. Like I said, I almost traded it on Tuesday. I wish I would have if I could be a Monday morning quarterback. Definitely would have. Um, but this is a great one right now. The profit target on Apex is 254. So that's about 10% from here. That's a big move. Even if we get 5% and you buy some call options, that's probably 50% gain. Really like Amazon right now. There's your stop price, there's your profit target. Again, these are the weekly charts, but it looks like a great buying opportunity. Hot sheet pick of the week. This isn't today's entry. This is for January 6th, but it's Apple. Enter on January 6th, exit on January 12th. If we get a deeper pullback like we're getting right now, this is actually going to turn into a sweet, sweet, sweet opportunity. So this is one you want to write down, put on your calendar for January 6th. Remember, Apple, January 6th, January 12th, average of 2.7% on the stock, 54% on the basic call options. Again, this is a seasonal pick that's gone up every year. If you guys don't have the hot sheets, highly recommend it. There's the link there. It's free. You just pay for shipping. We'll ship you the sheets to your house. Howard, appreciate what you're teaching me and trading me. Gives me more confidence. Awesome, Howard. That is awesome. Do I get better profit if a stock stays between the spread call or over the buy? Kathy, we get our best profit if it goes up with that QQQ one. If it goes outside either range, is going to be our best profit. With the basic wrap orders, we wanted to go above the top the higher strike call. Oh, awesome. Zana has the hot sheets. Love it. The short picks right now, CEG. Again, utilities are weak. They're bad seasonally. AEP, another one, weak, bad seasonally. And then FCX, which is a materials stock, negative momentum trade here. These are just something you might want to keep in mind if you want to add a hedge or do some short trades. I typically like trading long the best. It's way more fun. But for those of you guys who want to trade short, and I think these ones are all up nicely today, which means it's a better entry than it would have been on Tuesday. Again, for the monthly breakout, I'll post this in the chat one more time. There's the monthly tickers or ticker Lulu. There's the options for it. Here's the weekly one. This is next Friday's expiration. There you go. Mel, not from US, won't be shipped right. There's nothing to pay. I'm not sure on that, Mel. I actually don't know how they do the out of.
We have
Uh,
PDFs.
what's that?
We have PDFs. Just call the team
Okay.
and they'll be able to get you a PDF of it as well.
Okay, perfect. The two-way play, I'm not going to post this in here again. I don't want to confuse people or anything. I thought it would be fun. We'll just follow this so you guys get a feel for it, even if you didn't trade it. You can kind of see how it works. Let me be your test dummy for you. With that said,
Do you
thank you all for being here today. I've got to hop off. I'm on my last 30 seconds before Deanna kicks me out of here. I hope you
I
had
was like, do you
fun.
have time for one question?
Yep.
Okay, this guy on YouTube, Brett wants to know, how do you calculate the risk on a four-leg trade?
Well, that's a good question. Basically, number one, it'll do it for us. But it's just two debit spreads. So if you wanted to manually do it, you do your 522 and 523 here. And say, okay, my risk is 45 cents, right? And then you would do your 507, 508. 27 cents, 26 cents. 45 plus 26 is 71. So 71 is our risk. The max profit, again, because one's going to be worth 0 at the end of it and one's going to be hopefully worth $1, the max you can sell for is $1. I set a profit target at 85 cents to get us out early if we hit that target early, which is about a 21% gain. I'll have to build a calculator for it. Again, I don't normally trade that way. It can be fun though, especially when we have some uncertainty ahead. It's a good way to kind of play both sides of the markets. Awesome, Mel. Thank you. Mel, yeah, definitely watch the wrap order training if you haven't. That's going to be the foundation for a lot of what we do. Deanna, I think you posted that in here, but
Yep,
if
I
you
can
post
grab it
that,
in a second.
awesome.
Oh,
Yeah, definitely watch the wrap order trading. It's going to be, again, the foundation of everything we do, just because you're going to see for yourself firsthand why the odds are so much better. It's just, it's honestly, when I first figured it out back 3, 4 years ago, I could not understand. I was like, there's no way this is real. This has got to be a market hack. And I really, truly believe that it is kind of a market hack right now. You still have to know which stocks are going to be going higher or lower, but not nearly as drastically as buying calls or puts. We don't need huge moves. We need tiny moves. So that's really cool. Oh, it's all good, Mel. Go watch it again. Awesome. Well, thank you guys all for being here. Deanna, I'm going to get out of here so you can pivot the room over to the biggest trade of the year. The overnight trade I was talking about, we'll be talking about it here in about an hour. I got to catch up on the markets, catch up on my trades. And it looks like Lulu just filled at $5 for me. If anyone wants to get on that Lulu trade, filled at $5. All right. Catch you all later in about an hour.
all right, bye guys. And if you guys are on YouTube, we are keeping our Zoom room open. So I'm going to drop that link one more time for you guys to join us. We're just going to be sitting in here answering some questions. I'm going to be in here with Sarah just playing some music. So you guys actually have something to do instead of just, watching a blank screen. So we are going to close out the Zoom in a second. Wrap order link doesn't open. I will double check that and see. Give me one second. And guys, we are going to do a copy of the slides in a little bit. Graham just has to go in and make some edits and then I'll post it.